Good day and welcome to the Sanderson Farms Incorporated fourth quarter 2019 conference call. Today's call is being recorded, and at this time, for opening remarks and introductions, I would like to turn the call over to Mr. Joe Sanderson. Please go ahead, sir.
Thank you. Good morning and welcome to Sanderson Farms fourth quarter and fiscal year-end conference call. This morning we reported a net loss of $22.9 million or $1.05 per share for our fourth fiscal quarter of 2019. During the fourth quarter of last year, we lost $43.2 million or $1.95 per share. For the year ended October 31, 2019, we reported net income of $53.3 million or $2.41 per share. For fiscal 2018, we reported net income of $61.4 million or $2.70 per share. The results of the quarter and the fiscal year ended October 31, 2018 include an adjustment of $9.6 million or approximately 32 cents per share net of income taxes to record live inventories on hand at October 31, 2018 at the lower of cost or net realizable value as required by generally accepted accounting principles. Results for the quarter and fiscal year ended October 31, 2019 include a similar adjustment of $2.8 million or 10 cents per share net of income taxes. If you did not receive a copy of the release and accompanying financial summary, they are available on our website at www.sandersonfarms.com. Before we continue, I will ask Mike to give the cautionary statement regarding forward-looking statements.
Thank you, Joe, and good morning, everyone. This morning's call will contain forward-looking statements about the business, financial condition, and prospects of the company. Examples of forward-looking statements include statements about future earnings, expenditures, supply and demand factors, production levels, grain cost and supply, poultry prices, growth plans, and economic conditions. The words believes, expects, anticipates, estimates, model, should, plans, and similar words are intended to identify forward-looking statements. The actual performance of the company could differ materially from that indicated by the forward-looking statements because of various risks and uncertainties. These risks and uncertainties are described in our press release and in the annual report on Form 10-K for the year ended October 31, 2019, which was filed with the SEC this morning. All forward-looking statements speak only as of today and are based on current expectations, beliefs, and assumptions, which could change quickly based on many external factors affecting our business. We undertake no obligation to update or revise forward-looking statements.
Thank you, Mike. Our financial results for the fourth fiscal quarter and year ended October 31 reflect weak market prices for boneless breast meat produced at our Big Bird deboning plants, fewer than normal features for chicken products at retail grocery stores, continued inefficiencies at our Tyler, Texas complex as we move that complex to full production, slightly higher cost for feed grain, and planned downtime at processing plants to replace and upgrade equipment. Overall, poultry market prices increased slightly for the year compared to fiscal 2018, and grain prices were also slightly higher during the year. That said, feed costs and flock sold were flat as improved efficiencies offset the higher prices paid for grain. Our net sales for fiscal 2019 were $3.44 billion, and our net income was $2.41 per share. We sold a record 4.53 billion pounds of poultry products. The startup at Tyler has gone very well, and we continue to move that plant toward full production. We also continue to evaluate sites for our next phase of growth. While we have room to materially improve our performance, I'm very grateful to the efforts of our growers and our employees during this past fiscal year, and I look forward to working with them to capture the significant opportunities available to us during the coming year. With that introduction, I'll ask Lampkin and Mike to provide some details on the quarter, and I'll return after they finish to discuss our focus during fiscal 2020 and answer your questions.
Thank you, Joe, and good morning, everyone. As Joe said, overall market prices for chicken were higher during the fiscal year compared to fiscal 2018, and our feed costs per pound for the year were essentially flat. Tray pack prices during our fourth quarter and the fiscal year continued to reflect relatively balanced supply and demand dynamics, but volumes reflect fewer than normal features at retail grocery stores and at national food service restaurants during the year, which we believe is a result of ample availability and lower wholesale prices for competing proteins. For the year, our tray pack prices were lower by 1.37 cents per pound compared to 2018, but with a 2.25 cent per pound improvement in our mix, our overall average realized price for tray pack sales increased 0.89 cents per pound. For the fourth quarter, tray pack sales prices were higher by 0.12 cents per pound compared to the fourth quarter of fiscal 2018. Our mix was also better so that our net average sales prices during the fourth quarter were higher by 2.31 cents per pound. Sequentially, market prices were lower by 1 cent per pound, and our mix improved by the same amount for flat pricing sequentially. We remain constructive on our outlook for the tray pack markets during 2020. Bulk leg quarter prices were approximately 20.6% higher during the quarter compared to last year's fourth quarter, and for the full year were higher by 1.3% compared to fiscal 2018. Ernie Berry quoted market prices for leg quarters averaged 34.1 cents per pound during the fourth quarter and 33.5 cents for the fiscal year. Total industry export volume for the calendar year through October was up slightly compared to 2018. Market prices for boneless breast during our fourth quarter were lower by 1% compared to the fourth quarter a year ago, but were significantly lower than historical averages, even post-Labor Day. The quoted market price for boneless averaged 94.4 cents per pound during the fourth quarter and $1.06 per pound for the fiscal year. Boneless breast prices weakened substantially post-Labor Day, and the Ernie Berry market price for jumbo boneless breast is currently 98 cents per pound. Jumbo wing market prices during our fourth quarter averaged $1.73 per pound, up 19% from the average of $1.46 per pound during last year's fourth quarter. For the year, jumbo wing prices were higher by 19.9% from an average of $1.44 per pound during 2018 to an average of $1.72 per pound during 2019. The current Ernie Berry quote for jumbo wings is $1.57 per pound. Our average sales price for poultry products during the full fiscal year was higher by 2.4 cents per pound compared to last year, increasing 3.5% for the year ended October 31, 2019, when compared to the year ended October 31, 2018. For the full fiscal year, feed costs in broilers processed were lower by 0.1 cents per pound, or 0.5%. For the fourth quarter, our overall cash costs for grain delivered to our feed mills were higher than last year's fourth quarter. Prices paid for corn delivered during our fourth quarter were higher by 12.8% compared to last year's fourth quarter, while soybean prices were lower by 8.4%. Our feed costs per pound in broiler flocks processed were lower by 0.25 cent or 0.9% during this year's fourth quarter compared to a year ago. During this year's fourth fiscal quarter, we processed 1.28 billion pounds of dressed poultry and sold 1.27 billion pounds. We processed 4.61 billion pounds during fiscal 2019 and sold 4.53 billion pounds. For those of you modeling fiscal 2020, we currently expect to process 4.9 billion pounds of dressed poultry during fiscal 2020, which would represent a 6.3% increase in pounds processed compared to fiscal 2019. If we run our plants as expected, those pounds would be processed as follows: 1.14 billion in Q1, 1.22 billion in Q2, 1.28 billion in Q3, and 1.26 billion in Q4. Of course, these estimates are subject to change as a result of weather, changes in target live weights, market conditions, and other factors. Like Joe, I'm grateful for everyone associated with Sanderson Farms, employees, growers, customers, and vendors, and look forward to the new year. At this point, I'll turn the call over to Mike for a discussion of the quarter's financial results.
Thank you, Lincoln. Net sales for the fourth fiscal quarter totaled $906.5 million, and that's up from $798.1 million for the same quarter during fiscal 2018. The increase in net sales for the quarter reflects an increase in pounds of poultry products sold of 10.5% and a 4.5% increase in our average sales price for poultry products compared to last year's fourth quarter. Our cost of sales of poultry products for the quarter ended October 31 increased 13.6%, reflecting a slight decrease in cost of feed and broilers processed, an increase of 1.8 cents per pound in non-feed related COGS, and the additional pounds sold. For the full fiscal year, net sales totaled $3.44 billion, up 6.3% from $3.24 billion in fiscal 2018. Cost of sales for the year increased 6.2% compared to a year ago and totaled $3.16 billion. The average cost per pound in our poultry business increased 2 cents per pound, or 3.4% compared to last fiscal year, reflecting higher non-feed related cost of goods sold and relatively flat feed cost. Non-feed related COGS were 40.21 cents per pound during fiscal 2019, up 2.72 cents per pound compared to fiscal 18, and up 4.5 cents per pound compared to 17. Live costs were up just under a penny a pound compared to fiscal 2018 on higher chick costs and higher grower pay. Labor costs were higher by a cent a pound, fixed costs were higher by 0.5 cents per pound, and other costs, consisting primarily of maintenance and antimicrobial interventions in the plant, are higher by just under 0.5 cents per pound. The reclassification of freight that is separately invoiced to customers from a reduction in COGS to an addition to revenue added another 0.5 cents a pound. Inefficiencies at Tyler cost 1/3 cent a pound. We'll capture those efficiencies at Tyler when we get to full production next spring. However, I will point out that we were down a week at our Brazos, Texas facility and down a week in Macomb to install new equipment during this first quarter of fiscal 2020, and we'll also be down a week during Q2 of 2020 at Moultrie as we complete the equipment upgrades at all of our plants. We've sold 23.9 million more pounds of prepared chicken, a 22.6% increase, and our net sales price averaged 9.5 cents per pound lower, or a 4.9% decrease. SG&A expenses for fiscal 19 were lower by $10.8 million compared to fiscal 18, due primarily to a decrease in advertising expenses, trainee expenses, startup costs, and other expenses, offset by increases in legal costs, administrative salaries, and the reclassification of sales commissions as SG&A costs. For fiscal 2020, we're modeling $197.3 million for SG&A. That estimate includes no accruals for bonus comp or the ESOP. Both of those items are dependent on profitability, and we'll consider profitability as we move through the year and adjust this estimate accordingly. We estimate SG&A expenses of $49.5 million in Q1, $48.5 million in Q2, $48.5 million in Q3, and $50.8 million in Q4. At the end of the fiscal year, our balance sheet reflected stockholders' equity of $1.42 billion and net working capital of $365.4 million. For the year, we spent $250 million on CapEx improvements, and we paid $28.3 million in dividends. For fiscal 2019, interest expense was $4.2 million, an increase of $2.1 million over 2018. We had $55 million in debt on the balance sheet at year end. Our effective tax rate was 16.5% during the year, and that is because the company recognized a $2.1 million discrete income tax benefit due to certain income tax credits during the year. Absent all discrete items, our effective tax rate would have been 23.6%, and going forward, we continue to model an effective tax rate of 24.4%, exclusive of discrete items. We expect our CapEx for construction, maintenance, and special projects during fiscal 2020 to be approximately $198.3 million and to be funded by cash on hand, internally generated working capital, cash flows from operations, and as needed, liquidity provided by our revolving credit facility. Of that total, $41.5 million is expected to be spent on equipment upgrades at several plants, $15 million for a new hatchery in Jones County, Mississippi to replace and expand the hatchery currently serving the Laurel, Mississippi complex, $11.3 million for vehicles, which in past years might have been leased, and $130.5 million for annual maintenance. The company has a $1 billion unsecured revolving credit facility, of which $923.4 million was available at October 31, 2019. Our depreciation and amortization during fiscal 19 totaled $134.4 million, and we expect approximately $154.6 million for 2020. The way we're modeling that is $37.4 million in depreciation in Q1, $38.8 million in Q2, $38.9 million in Q3, and $39.5 million in Q4. And with that, I'll turn the call back over to Joe for comments about our grain strategy and thoughts on 2020.
Thank you, Mike. Our feed costs per pound during fiscal 2019 were flat with the previous year and represented the 7th straight year of relatively flat feed costs. Given the supply of feed grain and uncertainties regarding trade issues, we continue to expect relatively benign feed costs during fiscal 2020. If we had locked in prices for all of our needs for fiscal 2020, including what we have already priced at current values, that is, if using the Chicago Board of Trade contract prices for current and future needs as it closed last night, our cash cost for grain during fiscal 2020 would be $22.4 million higher than during fiscal 2019 based on 2019 volumes. Given that the carryout of both corn and soybeans remains healthy despite challenges with the 2019 crops in the United States, and given ample worldwide supplies of both grains, we should be able to buy grain at prices only slightly higher than last year. Corn basis values remain elevated as farmers remain reluctant sellers at current board prices. We have taken opportunities to price our corn needs through December and our soy meal needs through March, and we remain patient for now on the rest of the year. We own our corn basis through March as well. As always on this year-end call, I'll share a few things we're watching closely as we start a new fiscal year. First, as always, we will keep one eye on the South American crops. As of today, the corn and soy crops in Brazil and the rest of South America are progressing normally. Second, we will watch the United States Planting Intentions Report next March. Most everyone believes corn acres will increase in 2020, while soybean acres will decrease, and we will closely watch that report. Third, we will watch chicken production numbers. USDA estimates that the industry will produce approximately 3.2% more pounds of chicken during calendar 2020 compared to 2019. Looking at egg sets, chick placements, pullet placements, and the size of the hen flock, we believe the USDA's estimate is reasonable. Several facilities and expansions have been completed, including our Tyler, Texas complex, and we understand from publicly available information that a couple more expansion projects have either started operations or are near completion. These will add new production in our industry over the next few years or so. Whether or not and to what extent that new production exceeds demand for chicken remains to be seen. What we will do is continue to execute our growth strategy, continue to look for a site for our next plant, and let the markets take care of themselves. We will, of course, also be watching the chicken markets. Market prices for boneless breast meat produced at our Big Bird plants for the food service market have moved counter-seasonally higher over the past few weeks. The same is true for dark meat prices. As we have mentioned several times recently, we saw fewer than normal features for chicken from food service establishments during 2019 and during calendar 2019. That said, we are encouraged by the current chicken sandwich war in the QSR market, and we wish all the participants much success. As Lampion said, we feel good about retail grocery demand going forward, at least for everyday business. Volumes during 2019 suffered from a lack of feature activity at grocery stores, as many chose to take advantage of relatively low wholesale prices for beef and pork during the year. Of course, if product produced at our retail grocery plants doesn't go into a tray to get sold at grocery stores, it is packed bulk and competes in an already soft food service market. However, if market prices for beef and pork move higher during 2020, as many are expecting, chicken could certainly draw more features. Finally, we will keep a close eye on the impact of African swine fever on the protein and chicken markets. While there remain conflicting reports on the exact number of hogs lost to the disease in China and other Asian countries, the fact that the world is facing an unprecedented protein deficit over the short term is real. Exactly what the impact on chicken markets will be is unknowable. However, we are very encouraged that we are once again eligible to ship product to China and expect a material benefit from the open market. We are packing paws at all of our processing plants for export to China. At full production, we will produce approximately 87 million pounds of chicken feet per year, and at current pricing, estimate a $71 million operating income benefit annually from shipping chicken feet to China. We start the new year in good shape. Chicken markets are improving, feed costs are relatively flat, our balance sheet is strong. We start fiscal 2020 with little debt, and the company is well positioned to continue our growth strategy in the future. The new Tyler complex demonstrates our optimism and confidence in the long-term success of Sanderson Farms and our industry. The new complex will add value for our investors, opportunities for our employees and their communities, and more high-quality products for new customers. We remain committed to continuing our growth beyond Tyler and look forward to finding a site soon. Market conditions are improving as we start the year, and we believe the optimism surrounding the chicken industry as we move into the new calendar year is warranted. With that, we will now take your questions.
Thank you. And ladies and gentlemen, to ask a question, please signal by pressing *1 on your telephone keypad. If you're using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Once again, press *1 at this time. And we'll take our first question from Jonathan Feeney with Consumer Edge. Please go ahead.
Good morning. Thanks very much. Joe, could you tell us what that $71 million from chicken feet, how does that compare with your peak profitability from that product shipping into China in the past? And can you refresh my memory? I'm new, I'm actually not new, but back to the name, to what that when that stopped.
I didn't hear that second half.
Yeah, did
I'm
you
sorry,
say when we were doing?
Yeah, when did that stop? How does it compare with your peak profitability in that product in the past? And when did that stop?
January of 2015, the ban was put in place. We stopped packing. That year, it cost us $40 million before tax. This year, of course, we have more volume, and the markets are a little better, so we're estimating $71 million. China lifted the ban on U.S. poultry on November the 14th. On November the 22nd, all of the Sanderson plants were added to the USDA export library, which approved us to pack for China. November the 25th, we began packing paws at every plant for export to China, and we put our first paws on the water in a container on December the 5th. So we're packing, and we started shipping the 5th, and we'll continue to ship as product is ready.
That's really, really helpful. And if I could ask one follow-up, how about other chicken parts into China? Could you talk a little bit about the outlook for? I know historically it's been just very limited demand for a lot of chicken parts, but any comment you could have about the prospects for things besides feed into China for 2020?
Here's what we think. The Chinese are being very cautious about pricing. They paid a little too much for some product when they started buying heavily outside from some other suppliers. So they're being very cautious about pricing. But here's what we think is going to happen. We think in the early part of January, they're going to sign the agreement with the United States. And then over the next 60 to 90 days after that, the tariffs will come off. We think we're going to sell some product to them in January, though. And but it may be that there will be tariffs on that initial product.
35%.
Yeah, and a value-added tax in addition to that. But eventually, 60 to 90 days after that, that tariff comes off. And we will be more competitive. There's also a tariff on Brazilian chicken. An anti-dumping tariff, we think. We know there's a tariff, and once that tariff comes off on chicken, and just as importantly for us, on pork, that's another big deal for us. That when those tariffs come off, as a result of signing that Phase 1 trade agreement, which we think may be March before all that happens. But we'll ship product before that, we think. We think that'll happen in January. A whole muscle I'm talking about.
We've had inquiries from China for drumsticks, whole legs, and
leg quarters.
Some leg quarters and some boneless dark meat.
Boneless dark meat, yeah.
Gotcha. Well, that's all very helpful. Thank you.
Absolutely.
Thank you.
We'll take our next question from Michael Picken with Cleveland Research. Please go ahead.
Yeah, just wanted to sort of follow up and get your thoughts in terms of what it's going to take to get the breast meat market going. I mean, I know you talked a little bit about, the chicken wars, and I know that some of that is more small bird, but, how do we get the big breast meat market going? Is it going to be that more dark meat and pork leads to the U.S.? Is it going to be more featuring, what is sort of your outlook for that product?
It'll probably, to me, in my mind, it'll take a combination of things. It'll take some meat going to export. And when I say meat, I'm talking about poultry, beef and pork, all of that, maybe, and then it will take some features at retail grocery stores. It will take some features in QSR. It's going to take all of that for breast meat to move, but it will.
Okay.
And that's lining up to happen. All of that is lining up to happen.
Okay. So in terms of a timing standpoint, then, do you think? I mean, I know prices typically rally in January, but I mean, do you think that it's possible that we could start to see breast meat prices return to maybe the levels of like 5 years ago, if enough products, of other products, leave? And is there any chance that any breast meat could get exported to China or elsewhere, or is that strictly going to be a domestic product?
Yeah. You have a little rally in January, but breast meat normally moves most in March. Your biggest move in breast meat is normally in March, and then again, and if it moves significantly, it moves in the summer. But I believe it's March is when.
The last 2 years, boneless has gone up 40% in March. Both years, we got a little optimistic about the rest of the year after that move in March, and it kind of leveled out. But the last 2 years that's been the big move.
Yeah, you get a little bump in January, but your biggest move's in March.
All right, great. And then the last question is just, if you could talk a little bit about what's happening with wings, and if you expect a Super Bowl rally for wing prices, and then I'll pass it on.
Well, I mentioned this in my comment. Wing prices at $157 are higher than they were a year ago. We've really been surprised. We haven't been as short this football season as we normally are, and we would have expected wings to be higher than that. But I think going into New Year's and bowl games and followed by the Super Bowl, I'm optimistic about wing prices.
We think with wings being at the $1.74 level, that a lot of operators and boneless breasts being we think a lot of the operators are using boneless wings, and instead of $1.70 wings right after Labor Day.
All righty, thank you.
Thanks, Mike.
Our next question will come from Ken Goldman with J.P. Morgan. Please go ahead.
Hey, good morning, everybody.
Morning, Ken.
I wanted to ask two questions, if I can. First, Joe, you had some non-recurring costs, I guess, in 2019. Whether legal expenses were up, some inefficiencies on the production side, and you guys are also talking about having some down weeks in terms of production just to get those plants a little bit more efficient this year. How do we think about sort of the balance between, is there any way to quantify, I guess, some of the costs, whether they're COGS or SG&A that hit you last year that maybe are not coming back this year versus some of the new ones? I'm just trying to get some kind of sense for how to model that, because there's a lot of moving pieces there.
Well, I know you have $13 million at Tyler that you will not have. How much is training cost going to be down this next year? 7 or 8 million?
Well, it was this year, and it's going to be down another $2 million next year.
But you'll have the 7.
That's right.
7 plus 2, you'll have $9 million there. I don't think we can. I think you're going to have to not do legal. You're going to have to say legal expenses are going to be legal expenses for another year or two. There were 3 things.
Inefficiencies at Tyler is a third of a cent a pound, and you'll get that back when you're running full by the spring. And the down days at all of our plants.
We had 7.
Right.
We had 7, and this year you're going to have 3.
That's right.
there was three things we were looking at, though.
Advertising.
No. Well, you're not going to have the advertising either. But there were three things.
Once again, it is *1 to ask a question. We'll take our next question from Heather Jones with Heather Jones Research.
Okay. I'll get back with Ken on that.
Heather? Operator?
Caller, please check your mute function.
I don't hear Heather.
Not on, guys. Are y'all able to
There
hear
she
me?
is.
Yeah,
there we go.
Okay. Okay. Thank you. Going back to you saying the days that y'all were down for equipment upgrades, there's going to be 3 of those in 2020, but there were 7 in 19.
Yeah.
Did y'all give a number for that? So how much that could be a reduction in cost?
No, in our
Volume.
in our second and third quarters of 2019, it cost us a third of a cent a pound each quarter. I don't know. I think it'll cost us about that again.
It'll be less than half of that.
Well, for the full year, right. But in the first quarter, we had 2 plants, which is what we had during last year's second quarter. So I'm going to say a third of a cent a pound, Heather.
In the first quarter.
Okay.
When is the next
In which, by the way, the first quarter is already challenged with 4 holidays and down days ahead of Christmas
Low volume.
and Thanksgiving.
Right. Going on to China, Joe, you mentioned that you think that in January, even with the tariffs still in place, that that the industry will ship some product to China. And did I hear you say whole muscle? So you're thinking product in addition to paws?
Yeah.
Okay. Okay. And I just wanted to ask you guys about the whole cold storage facility issue. When do y'all expect them to approve that list?
In December.
Is that
25th.
what?
25th of December.
They're going to give us as our Christmas present?
Yes, that's what we're expecting. And we heard that from USDA. USDA reported that.
Okay. And do you think it's going to be an actual announcement, or is it just, how are you expecting that to be handled?
The way I understood it was the lists have been submitted to them, and if they do not publish it, they'll all be approved automatically. If they don't inspect them, they're not going to inspect all those cold storages. No. They're going to be approved automatically, just like they did the plants. They were all on the list before. Yeah. And all the plants were on the list before. So they're going to approve them de facto.
So basically, if we don't hear nay by December 25th, then it's approved.
Yes, that's right.
Okay. And then I just wanted to talk about cash. So if the supply shortage turns out to be as expected, y'all should generate some pretty good cash flow. Can you give us a sense of your priorities for that?
Well, our first priority would be to build another complex. But, we don't feel like we can do that right this minute. So, in my mind, it would be a special dividend, which is what we've done historically, and prepare to build a plant. Those are the 2 things.
Plant?
Yeah.
Okay. Okay. Perfect. Thank you so much. Have a Merry Christmas.
Thank you, Heather. Same to you.
And we'll take our next question. We'll return with Ken Goldman with J.P. Morgan. Please go ahead.
Thank you.
Good.
I think Drew heard your deliberations as silence. But I know you guys.
I don't know what happened. I can't get it out of my guys, but we identified 3 things, and I can't get it out of them. And I will get back to you. There were 3 things we identified to, it was training costs that was going away. That may have been legal expenses. Legal expenses that were going away. What was the legal startup? And what? Startup. And startup. Those 3 things are going to go away, and it was a penny a pound, but legal are not going away next year.
Got it. Okay. Thank you for that.
And that was a pound that are going to disappear from us.
Okay, thank you for that. And then just a very quick one. You were mentioning that the first quarter has a reasonable number of headwinds. Was the messaging there more about just typical seasonality, or was it more about a certain number of headwinds that maybe are unusual to the first quarter of 2020?
No, the 4 holidays are every year. Yep. Down dates ahead of Thanksgiving and Hanukkah and Christmas are every year. The things we will have this year is Macomb was down all last week getting its equipment upgrade, and you were down in Brazos in November. So you had those additional down days on top of the lower volume you normally get. Yeah, no, but you're absolutely right, Ken. Those are every year except for the additional down days.
Great. Well, we're done. Thank you guys so much.
You bet. Thank you.
Our next question will come from Ben Tarr with Barclays. Please go ahead.
Hey, good morning, Joe, Lankin, Mike. Thank you very much, and congrats on the results. Just wanted to follow up on the 71 million figure you've mentioned, operating income benefit for POS to China. Is that obviously it includes? Would it include for a full year what the current tariffs are on POS to go to China? Because you've mentioned you expect those tariffs to fade away. So when you gave the 71 million, is that inclusive of tariffs going away, or is that still with tariffs, and actually the number could be higher if tariffs were to go away, and you would actually get a better pricing out of the POS you ship?
Could be higher if the tariffs go away.
Well, let me put a look. We have 3 plants that have never packed POS before. Palestine, Tyler, and St. Paul's. And we're just starting up. And so to be really good, you need to pack 65 to 70% of your POS as grade A POS. And we're not there yet. We're not 100% efficient. We're not packing 65 to 70% at those 3 plants, and we're really not there at any of the other plants either. So we'll probably be there by the end of January. We started packing November the 25th. So it's going to take us a couple of months to get up to capacity and get everybody trained. Nobody, the people in the plants, the division managers had done it before, maybe some of the superintendents, but no employee at the plant had done that. And so we're just ramping up right now. And but the answer to the question is that when the tariffs go away, your margin probably going to go up a little bit.
Okay, perfect. So that tariff away would be just additional incremental. And can you remind us what the actual tariff right now is on POS?
35% tariff plus there's a value-added tax, and I don't know how much it is. It's 10 or 12% for the value-added tax.
Okay.
Now that's not going to go away. The value-added tax will not go away. The 35% is what we believe will go away, and that's on. They have actually, pork has a 70% tariff on it, but they have been waiving the pork tariff for the last 45 days. And they've allowed some people to bring in some pork. We think that'll, but they're not bringing in as much volume as they could be bringing in. I can't remember, where did we read that? Who said?
It's Steiner. And
Yeah, how much did he say?
well, yeah, one estimate out there by somebody in the industry is that the pork industry could export as much as 30 or 32% of their production in 2020. You know, that's the high end of what I've seen, but that would still be a lot of product going into that export market.
They could use that much.
They could use that much.
Okay, perfect.
And that's important. That is as important as shipping chicken over there.
Okay, perfect. All right, thank you very much for that. And then just one question. I mean, thank you very much for all the breakdown you gave on the non-feed related costs. And if we take a look at your outlook in terms of cost into next year and also SG&A, it seems to be a little lower than what it was 2019. Can you elaborate where the saving comes from, particularly on the SG&A side, because that seems to be a lower number, close to 200 million, versus what we've been seeing in 2019, which was more like 210 million, 211 million. So there is about a 5% savings. So where does that come from? Is it marketing? Is it labor? What's driving that number down on a year-to-year basis for SG&A?
Yeah, I'll tell you that, 9.4 million of it is the absence of startup cost. You'll recall that we started the Tyler plant in February or January, and you had startup cost in November and December, which was last year's first fiscal quarter. So 9 million there, 1.8 million additional savings in trainee cost. Legal expenses, we optimistically, probably naively, have reduced by 3 million for next year. ESOP, we didn't include an ESOP accrual, and we had a $3 million accrual in fiscal 2019. So, and then that'll be offset by an increase of 2.8 million in administrative salaries and small increase in some other things.
But what is marketing compared?
Advertising expenses is flat.
Flat.
Yeah. Up $900,000. Okay.
Perfect. Well, thank you very much, and congratulations again.
Thanks, Ben.
Thank you.
Our next question will come from Ben Bienvenu with Stephens Inc. Please go ahead.
Hey, thanks. Good morning, guys.
Morning, Ben.
I want to ask, Joe, you made some comments about corn basis. I know you all have had a hard time pricing basis. I just want to get your sense of, relative to a few weeks ago or a month ago, is it getting any easier to price basis? And what are you all looking for? What do you think farmers are looking for that basis to break and normalize a bit?
If I were to price basis for the fiscal year, which I'm not going to do, it would be up 24 cents a bushel. Let's see, that's 82, 18, so yeah, 24 cents a bushel. We priced through March. I priced January, February, March last week, and it was up about 18 cents a bushel. Wasn't it about 18? Yeah. But I had some truck corn I bought for Texas and Mississippi and North Carolina that was less expensive, and it kind of blended that down a little bit. But the farmers are just upset, irritated. They had a bad planting, and then they had perfect pollination and perfect rain, so they made more than they thought they were going to make, better yields. And now they're having, not this week, but Monday a week ago, there were still 900 million bushels of corn in the field. They can't get it out. And that's problematic for them and for the supply. But, you know, they'd like to get it out and get it in a bin. And so they've had a bad time with this crop. And they don't want to sell it for, you know, corn's rallied in the last 2 weeks. It was $3.75 a bushel on the board, and the basis was negative 40 to 50 cents a bushel, particularly where this corn is. In Minnesota and Wisconsin and North Dakota, it's probably 60 cents a bushel negative up there. And it's been a bad crop for them. And I understand that. It's like selling boneless breast for 70 cents a pound. I don't like that either.
That's helpful, thanks. And then, Mike, I want to ask about freight rates. I know you guys had the accounting changes for freight in 2019, but putting that aside, you know, it sounds like freight rates are going to be better in 2020. And I'm wondering if you could give us a sense of what exposure you guys have to contract versus spot, and what you think about freight rates into 2020. It seems like it could be a nice tailwind.
Yeah, you know, it could be. They go out, you know, we bid a lot of lanes for the full year. The logistics team downstairs looks at where they're going to be shipping product, and they'll go out to bid for those lanes and get a lot of them priced in January. And then they fill in during the year, so if prices come down or go up, we're exposed to that. But most of it is priced for the year. Lampkin, I hadn't heard any numbers yet.
They tell me they're not going up.
Right.
I don't know if we're going to save a lot of money, but they're not expecting increases.
Because of fuel.
Yeah.
So I don't have a number yet. But it's a good question, and we'll fill that in on the February call after we get everything priced in January.
Okay, great.
Most of
Merry
that
Christmas.
Say it again, Ben.
I just said Merry Christmas. Good luck with.
Thank you, Ben,
so much. Good talking to you.
Our next question will come from Eric Larson with Buckingham Research. Please go ahead, sir.
Yeah, thank you, everyone, and happy holidays to all as well.
Good. Thank you very much.
So, Joe, we talked. I'm forgetting some of the timing here. I guess it's age that I have an excuse for. But you made a conscious decision to bump your salaries up for your employees. I think we talked about it in March or April, and then you felt that
June the 2nd.
Okay, so you also felt that you had the ability to improve your efficiency, improve a series of efficiencies that would pay for that. And I think you probably did get some benefit of that this year, but is that maybe going to be a tailwind in 2020 as well, or would that be more of a neutral cost impact?
I think neutral. We're going to start out the year. Let me just put this in context. We're going to start out 2020 in much better shape in the plants than we did 2019 as far as yields in the plants. All of the plants the yields are much better in every plant we have. They're every one of them are close to the top 25%. All the big bird plants are in the top 25%. And all but one of the tray packs are in the top 25%. We hadn't done that, and I attribute that both to the management and also to the fact that we're staffed at all those plants. Our pricing at all the tray pack plants are excellent, and it's been a year-long process getting that. And the live production again, had another great year. They're in the top 10%. And I'm attributing that to the pay that we did, and we're pretty close to our live weight target.
Mm-hmm.
Now, one thing we have what we call an extra board, which is about 10% of the labor force, and most of these plants have never had an extra board, and they've never managed an extra board, which they just never were able to hire enough. And the trick with an extra board is bringing them in, letting them work 3 hours, and then asking for volunteers to go home. Get them trained, and then let people go home. Extra boards cover absentees and people that are out on leave and pardon? Vacations and things like that. Well, we're hired up full everywhere and have extra boards. So for the first 3 or 4, 5 months, we had too many people in the plant, and they have to learn how to manage those extra boards, and we'll get that done pretty quickly. And but I think that I think that'll be back in good. The tray pack plants are excellent. Their costs are excellent. The deboning plants are the ones that hadn't really gotten back, I would say, to neutral yet. They're still going through a lot of training, but I think that'll all be fine soon.
Got it. So is the issue with still building a new plant here? Is it still finding adequate labor in any of the regions that you would like to put them in? Is that the constricting factor?
Yes, we hadn't identified a site where there's ample labor, and I think it's not a good time to be looking for contractors, and it's not a good time. I think material costs are very expensive right now. This is not a good time to be bid. We just bid off a hatchery, a small hatchery in Jones County, and it came in a good bit higher than we thought it would. And it's just material, just concrete and steel and it's very expensive right now.
Yeah, got it. All right, gentlemen, thank you again. Happy holidays.
Thank you very much. Good talk.
Thanks, Eric.
And we'll take our next question from Adam Samuelson with Goldman Sachs. Please go ahead.
Yes, thanks. Good morning, everyone.
Morning, Adam.
Joe, Lampkin, Mike, I was hoping to get a little more color on the retail market. Maybe just, I know this is a slower time of the year from a retail perspective, but are you getting any kind of visibility on featuring picking up through the first quarter? And any comments you could have just around just some of the base contracting kind of activity for 2020 and just making sure your products got the space at the retailers where you want it.
January is shaping up nicely as far as boneless breast features at retail, which is usually January usually is like that. Usually January is a big month for features, especially on boneless breast. A lot of people make their New Year's resolutions regarding their diets, and they want to eat healthy, and so they go to chicken, and a lot of them go to boneless breast. So that's developing nicely for our customer base for January. I'm not sure I understood the second question.
Well, just contract. Are you seeing? Are you guys sold out? And any contracting commentary just in terms of make sure you got the customer base set and you got the retailers that you want to be in?
We have, tell them about, you're starting two new customers.
Two new. We're still selling the new production out of Tyler. All of that product's not placed exactly where we want it to be, but we are starting up two new accounts in January that will both be beneficial for that Tyler plant and it'll be a good lick toward getting that plant completely sold out. We still have some to sell, and got a number of retailers we're talking to about that.
Okay. And then maybe just on the food service side with QSRs, with the chicken sandwich wars, just are you guys seeing kind of orders for some of those further processors? Are they pulling in jumbo breast meat? I know a lot of it's been small bird, but are you seeing some others start to stockpile jumbo boneless breasts as a competitive response, or just any activity in that part of the channel?
We are not seeing that. We sell a number of other processors, and they're buying. Their orders are normal, but we're not seeing any ramp up.
Adam, it's Joe. We think this move in boneless breast that we saw when it went from 88 to 98, we think that was further processors pulling in boneless in anticipation. And so that.
Our next question will come from Robert Moskow with Credit Suisse. Please go ahead.
This is my first earnings call. Yeah, I didn't expect so many questions about cost. I think my initiation had 30 pages on chicken pricing in China, so maybe I need to sharpen my pencil on your cost structure and all the complexity here and what consensus is for next year. It's like a $200 million improvement baked in. And is there any way to, and then maybe even layer into that, the chicken paw?
Internally, of course.
There are a lot more moving parts to that than just exports.
I mean, to me, you got two or three things that are on the horizon. You have exported chickens to China. You have exports of pork and beef to China.
Right.
And you have the possibility of a very large player featuring a chicken sandwich in the United States. And if you'll go back in history and look and see what happens when that particular player features chicken in the United States,
It's usually pretty good.
Pretty good.
it's not a bad situation. So it's not one thing that's happening. There's a multitude of things that are on the horizon.
And if beef and pork go up, we get more features at retail. And you get pricing benefit from that.
That's what I'm talking about. That's what I'm talking about, beef and pork being exported.
That same retail, that same player is also going to feature a breakfast chicken biscuit starting in 2020, trying to fend off some competition from some others that are going to start doing breakfast.
Yeah. So there's a lot of things happening. It's not just one thing.
Right. Fair enough. That's my only question. Happy holidays to everyone over there.
Thank you very much.
Thank you so much.
Appreciate that.
All right.
And this does conclude today's question and answer session. I'd like to turn the conference back over to Joe Sanderson for additional or closing remarks.
Thank you, and thank you for spending time with us. On behalf of everyone at Sanderson Farms, happy Hanukkah and Merry Christmas, and happy, prosperous, and peaceful New Year to everyone. Thank you.
And this does